are pouring generic brand cereal while you are eating a $44 breakfast.
What difference at this point does it make?
Hey guys, welcome to the Silver Report. Here we are, it's Wednesday, March 15th, 2017. We have gold currently trading at $1,220.70. That's a positive change of 1.76%. Silver had a massive move. It's at $17.42. That's a positive change of 2.88%. And all this on the day that the Federal Reserve just came out and released the information that they are going to be raising interest rates. So this is a very strange move. And so it seemed like a normal press conference, the standard situation. You know, Janet Yellen gives a runaround to every question that is asked her. And then from Bloomberg, Kathleen Hayes decided that she wanted to get to the bottom of just why a data-dependent Fed is hiking in a world in which the economic data is rapidly deteriorating. And so she brought out some facts, some real news, and it really makes you question what turned the Federal Reserve into a terrified, panic-stricken pack of hawks. And so this is how she continued. I'm going to try to take the opposite side of this and this question about market expectations and how the markets got things wrong, and then how you say the Fed suddenly clarified what it already said. But for example, if you look at the Atlanta Fed's latest GDP tracker for the first quarter, it's down to 0.9%. We had a retail sales report that was mixed. We had the upper division of previous months make it look better, but the consumer does not appear to be roaring in the first quarter, kind of underscoring the wait and see attitude you just mentioned. If you look at the measured of labor compensation, you note in the statement that they're not moving up, and in fact, they are. And if you look at average out, there are so many things you can look at, and you yourself have said in the past that the fact that that is happening is perhaps an indication that there's still slack in the labor market. I guess my question is, in another sense, what happened between December and March? And so GDP is tracking very low. Measures of labor compensation are not threatening to boost inflation anytime fast. The consumer is not picking up very much. Fiscal policy, we don't know what's going to happen with Donald Trump, and yet you have to raise rates now. So what is the motivation here? The economy is so far from your forecast in terms of GDP. Why does the Fed have to move now? What does this signal then about the rest of the year? And so Yellen was terrified. She frowned with her little awkward smile. And so her response was, so the GDP is a pretty noisy indicator. And if one average is through several quarters, I would describe our economy as one that has been growing around 2% per year. And you could see from other projections, that's something we expect to continue over the next couple years. Now, the pace of growth has been consistent with the pace of job creation that is rapid. Then there is sustainable labor force participation begin to move down in line with what we see as a longer run trend with an aging population. Now, unemployment hasn't moved that much, in part because people have been drawn into the labor force participation, as I mentioned in my remarks, has been flat over the last 3 years. And she continued on and on and on and on and on. And it was nothing about the truth. She was stunned, began to look off of the stage to the corner, out of sight of the cameras, concerned about being put into a corner about just what is the Federal Reserve doing to the U.S. economy right now. And these revelatory statements of hers, this reaction to the fact of when you put the honest facts about what is taking place in our economy and you examine them carefully, there is no reason for the actions you are taking. If what you're saying is true, Mrs. Yellen, there's no reason for the actions that you are taking, is the question. Of course, anyone would get nervous. That is because the fact that they are not explaining the excess reserves that the banks have been having, that they have been taking out and loaning out have increased. Inflation is increasing much faster than they had anticipated. We went from 0 to 2.5% in inflation. We have dangerous numbers. The economy is heating up, and they're unable to sustain this economy any further. More than that, we've seen gold and silver come out and have a lot of energy behind them, a lot of excitement behind them, people moving into precious metals on a much larger volume, countries around the world moving into gold and silver, and people rejecting the Federal Reserve policies. So of course they have no choice but to destroy the American economy. Of course they have no choice but to slow any hope of growth. Of course, they have no choice but to try to hide the fact that they've created endless amounts of debt and paper that they call our currency today, and it's beginning to creep its way into the markets. And stealing, backdoor robbery from the pockets of every United States citizen, and more than that, every oil-producing nation around the world, because they use the dollar too. So this robbery that has taken place, and this inflation, another form of taxation that is taking place, is unable to be hid any longer. That's why they raise interest rates, and that's why she can't talk about it. That's why she looks to the side of the stage. That's why she needs help. That's why she needs to phone a friend whenever she's put onto the spot about the real data from our economy, which shows that things are much worse. Not a recovery, but a recession. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys all so much for stopping by. As always, stay safe.